Alright, what's up guys? Good morning and happy Monday. We are back to it like we never left. Alright guys, we'll jump in here, take a look at a few different topics of discussion, and we'll get ready for the week ahead. So, pretty good run here over the last 3 or 4 weeks from the Bulls. The Bulls have had a pretty good run. Last week we started seeing some signs of exhaustion. The Bulls getting a little bit tired, and a few other things like the dollar, HYG, just a couple different things in the market. That gave us a little bit of a heads up. We might get a bit of a dipperoo here this week. So for the S&P futures, which are currently down 1.2%, there is a bit of a dipperoo. So all of a sudden the S&P futures are back to the daily 21. The QQQ is back to the daily 21. So now the big question is, where do we go from here? So here's the scorecard. Right, points for the Bulls and points of the Bears. So for the Bulls here, guys, big push here over the last 3 or 4 weeks. So they definitely make some progress, and, realistically, we were due for a flush. We spent 2 to 3 weeks trading up here at 2 ATR, and then we started to run out of buy signals. So the pullback makes a lot of sense, but yeah, the big question is whether or not we hold up from here, and if we continue to trend higher. So in terms of what's looking good here for the Bulls, for now the structure is still intact, meaning we're trading above the daily, the weekly, and the monthly 21 EMA. Come on, monthly chart. There you go. Right, so we're above the monthly, weekly, daily 21 EMA. As long as that's the case, here's a game plan. If we can hold support above those moving averages, pretty much waiting on some buy signals. So for the futures, at the moment the buy signals, or the big 3 signals rather, daily chart is neutral, 4-hour chart neutral, 2-hour, 1-hour charts are neutral, so we're fresh out of buy signals. But the 30-minute and the 15-minute, they go bearish. So if we pull up the 30-minute chart, chances are, guys, we're going to continue to move lower until we can cancel out that 30-minute sell signal. So I know a lot of you got the indicator. Keep a close eye on that. But as long as we hold up above those moving averages, 4,100 you could call it, if we do get some fresh buy signals, we might be looking for some bullish entries for a little bit of continuation back towards the upside. Now in the event the S&Ps and the Qs are trading back under the daily, weekly, monthly 21 EMA, at that point, guys, all bets are off. So personally, under those moving averages, pretty much going to can the idea of looking for bullish trades, at least as far as like big tech, the financials, the semiconductors, energy, and natural gas. They might be all right. So for now, I think that's all the Bulls have got going for them, and that's a lot to have going for the Bulls. Monthly structure improves, weekly structure improves, daily structure improves. But in my opinion, if we end up under those moving averages, well then pretty much at that point, the Bulls have given back all the progress. So that is what they got working in their favor for now. Now, as far as the Bears go, for the Bears, 0.1 for the Bears. And mind you, we're going to gap down here in like an hour. But the S&Ps, they're still trading a good 3% before today's open above the weekly 21 EMA. So we're still pretty extended from that perspective. We've gone full neutral. So there's another point for the Bears. The S&Ps make this huge push. Now we're extended, and now we're running out of gas. Not sustainable. So 3% above the weekly 21, fresh out of buy signals. Same thing for the QQQ. And then if we take a look here at the dollar, the old Dixie, this daily squeeze looks like it wants to fire to the upside and take the dollar into a brand new high. So chances are if the dollar is breaking out to a brand new high, and for now the structure looks like it could happen. Daily squeeze with a positive histogram, a little bit of positive histo action, and we have buy signals on the 2-hour, 1-hour, 30-minute, 15-minute, 5-minute. So if you're long Tesla, Amazon, Google, Nvidia, you really want to see the dollar pull back here. The dollar breaks out into a new high, and again, the pretty colors kind of suggest it's got a chance. The dollar breaking out to new highs, makes it pretty tough for the the equities market, the S&Ps, the Qs, etc., to really get anything sustainable going to the upside. So keep a close eye on the dollar. For now, that is a point for the bears, and then the junk bonds, HYG, they start breaking a little bit of structure there on Friday. So we've got the daily squeeze. We are under the 21, fresh out of buy signals, and the 15-minute and the 5-minute chart go bearish on the big three. Let's see, 77, 50, 78. Yeah, I mean, the best way to look at it, as long as HYG is under that daily 21 EMA, probably expect to see a bit more downside in the market. So, again, points for the bears. The S&Ps, as of Friday's close, 3% above the weekly 21. Both the S&Ps and the Qs have gone full neutral on the big three. We're out of gas. The dollar looks poised to break out to new highs. HYG has got sell signals, and then the strongest stock in the world, Apple, this is still super extended. So Apple is 4% above that daily 21 EMA. So here's where something like the QQQ could be in a little bit of trouble. Even though the QQQ is pretty much back here at the 21 EMA, Apple's got another 4%. So I would like to think the Qs are probably not going to hold support at their 21 EMA if Apple's got another potential 4% to the downside. And then as far as the big three on Apple, we are starting to see signs of exhaustion. We still have the daily buy signal, which means if Apple pulls back to 165 and holds, probably a pretty good buying opportunity. But your 2-hour, 1 hour, 30-minute, 15, they've all gone neutral. So signs of exhaustion in Apple, no bueno for the S&Ps and the QQQ. So there's a scorecard, guys. For the bulls, we're still holding pretty good structure. We're above the monthly 21, we're above the weekly 21, we're above the daily 21. In the event that changes, I think we're looking for more shorts here. Points for the bears. The S&Ps are still extended. S&P and QQQ are out of gas. They go full neutral. Dixie looking pretty good. HYG looking pretty shitty. And Apple looking a little bit tired. So it's not going to be a dull week. With all that being said, and the rumor on the street is JP and the boys, they're linking up at Jackson Hole this week. So I'm sure that'll play a role as well. But as far as the watch list, guys, with all that being said, XLK is still extended. So it's kind of in no man's land. I don't have buy signals, I don't have sell signals. We're in no man's land above that 21. So for me, there's no bullish or bearish trade. The financial sector, that's in no man's land. The utility sector, super strong, but I can't do too much with it up there. So the picks for the week on my end, energy, XLE, and natural gas, UNG. So we'll start off here with UNG, which is going to gap up to $34 this morning. So we're still waiting on a dip to buy here. But yeah, UNG looking pretty primo. We got a fresh daily squeeze, the low compression form of the squeeze, firing off to the upside. We've got daily 4-hour, 2-hour, and 1-hour buy signals on the big three. What I really like here, because that's all pretty solid, is the weekly chart. So right now you got a pretty similar pattern to what you had back here, where UNG makes this big push, then you get the flush, then notice how the weekly chart kind of rebuilds structure and prints a brand new weekly squeeze. Well, when that weekly squeeze fired to the upside, that took you into a brand new all-time high. Or it took you into a new high. So kind of similar pattern right now, where you get the big push, you get the flush, right? So there's your high. Then you rebuild structure, you print a brand new weekly squeeze. We're going to gap above resistance this morning. So pretty good chance that weekly squeeze fires to the upside. That could take UNG towards $40. So I'm not getting the dip I was looking for this morning, but any dip here in natty gas, we're looking for a little bit of action. But then jumping back over to XLE. And what's interesting is if you remember like January, pretty much January up until like the summer, The S&Ps were trending lower. Pretty much the whole market was trending lower, except for natural gas and XLE. So maybe a little bit of a blast from the past. But for energy here, we got a nice squeeze on the weekly chart. So momentum continues to shift. And then, of course, we have the daily squeeze here, which I would think, as long as you're above that daily 21 EMA, for now that squeeze looks poised to fire to the upside. So as far as XLE names go, the big man on campus last week was Oxy. I guess when Warren Buffett wants to buy like half of your company, that'll do the trick. So for Oxy, which is obviously a little bit extended, beautiful weekly squeeze. Nested inside of that, I think a really good-looking 3-day squeeze, and then, of course, the daily squeeze, which probably fires to the upside this week. Do I think we're going to get the dip? That might be tough, but I think any dip towards 68 to 65, probably a pretty good buying opportunity here in Oxy. But for the rest of energy, some pretty good stuff out there. So for those of you in my mastery, we bought some calls last week on Exxon Mobil. So pretty similar, where you have your weekly squeeze, and inside of that you have your 3-day squeeze. Inside of that, you got your daily, and for now we got a buy signal here on the hourly chart. So we grabbed some calls on Exxon, looking for a push towards 97. Then you've got Chesapeake. Might not be a bad pickup down there at that daily 21. Only if we get our buy signals. Got to follow the pretty colors on the big three. So we're watching Chesapeake here. We're watching EOG for a dip. And that's basically the trade. Daily squeeze. If you have buy signals on your lower time frames, you're taking the entry at that 21. Looking for your push towards +2. So EOG moving and grooving. You've got Devon here. Whole bunch of buy signals. So looking for a dip in Devon. And then you've got Chevron. Brand new daily squeeze kind of coiled up here near that 21. So if Chevron can go from neutral to bullish, might not be a bad one for your watch list. And for now, guys, that's pretty much it. It's pretty much it. Everything else is kind of hurry up and wait. So like the semiconductors, for example, if the semiconductors hold up here at that 21 EMA and we start to print a bunch of buy signals, alright, then I got to think that daily squeeze probably wants to fire to the upside. If we're hanging out under the 21 with a bunch of sell signals, well then I'm probably thinking a bit more short. At the moment, we don't have either or. We're hanging out at the 21 and, generally speaking, not too many buy signals. So, things like AMD, things, names like Tesla, names like Amazon and Google, to me, they're all kind of in no man's land. Now, they're trading where I want to take my entry. I always want to get long or short near that 21, but I've got really, no clarity, no confirmation right now from the market or from the big three indicator. So, patience there, but, whoops, almost knocked myself off. There we go. But one more thing before I let you guys go here. As far as looking for shorts, we go live every morning in my mastery. We go live every Sunday morning. So somebody had asked a question yesterday, do we look for a short here in Apple? If we think the market could pull back a bit. It's a good question. So 2 ways to look at it. One, Apple's got a lot of room between the current price and support. Trading 4 or 5% above that daily 21. So obviously, if you can catch that 4% flush, you're going to make some pretty good coin on your puts. That's one perspective. The other perspective is you're kind of picking on the biggest guy on the playground. By far Apple's like the strongest name in the market right now. One of the strongest names. So, yeah, granted, if the Qs pull back, the S&Ps pull back, you're probably going to see some selling pressure here in Apple, but there's also the potential, because it's so strong, might not be the easiest short. My mama texted me. Might not be the easiest short. What might be a little bit easier could be the names like Roku, the names like Zoom, the names like Teladoc. pretty much all the names in Cathie Wood's portfolio. Here's why I think they could be easier shorts. I think a great way to make our bullish and our bearish decisions is by looking at the inverse chart. So for me to answer the question, though, do I want to short Apple here? Well, the real question is, would you go long the inverse chart? Meaning, if I put a minus sign in front of Apple and I look at the current pattern upside down, would I be looking to get short? Or would I be looking to get long? No, I wouldn't. We're in a downtrend. We're under the 21. I have daily sell signals. I wouldn't think about getting long that. I'd think about getting short at the 21. So with that being said, you take the real deal here. I wouldn't think about getting short. I'd think about getting long at the 21. So here's the difference. If you look at the inverse chart of Roku, this actually fits my bullish criteria. So for those of you in the mastery, this is pretty much the trade we look to take to the upside over and over again. Daily squeeze above the 21 with 1 hour, 30-minute, 15-minute buy signals. If it's my textbook bullish trade on the inverse chart, that means the real chart is pretty much my textbook short. We're under the 21 with a bunch of sell signals. So I think Roku, names like Zoom, they're all under their 21. They all have, a good amount of sell signals. That all kind of points towards path of least resistance being to the downside. Even though Apple's extended, for now the signals on the daily and the 4-hour chart suggest path of least resistance is to the upside. So you could look for a short here. And being that it's the biggest tree out there, if it falls, it'll fall hard. But if I'm looking for shorts this week, probably going to lean towards the ARC kind of stuff versus the big man on campus. But that is it, guys. Hope you found this helpful. Be patient this week. And yeah, pretty much for me, I'm a simple guy. If we pull back to support and hold support, and then we start getting some fresh buy signals, I look for a bullish trade. So that goes to the S&Ps, the Qs, you name it. If we break support, well, then I'm not looking to get long. Pretty simple. But I hope y'all found this helpful. If you haven't already, go on ahead and subscribe, and I will see you Wednesday morning for some pre-market prep. Talk to y'all then.